Okay, it's right at the top of the hour, and I'm going to start this webinar on State of Cyber Q3 2025. So this it kind of indicates how our processes are improving in that on October 2nd, we can record the state of cyber for the last 3 quarters. So we've got all the investment information in hand, and then all the changes to headcount as well. Welcome, everybody. This is being recorded and will be available later today. And we'll just go back to my Substack or look on LinkedIn, and you will see the link to the recording. I'll put it up on YouTube, and I'll update the Substack with some more of the data that I kept hidden because I didn't want to steal the thunder for the presentation. So we're going to talk about the markets. We're going to talk about underlying technology and financing. So funding, basically. So let's talk about the global market. First of all, in just a broad brush look at all the vendors. So we track close to 4,000 active vendors in the cybersecurity space. So 44% of those 4,000 have added headcount so far this year. So in the first 3 quarters, they've added headcount. To put that in context, give you some perspective, this is the lowest I've ever seen that number. So I've been doing this for 3 or 4 years, just checking that growth rate. Usually it hovers, slightly above 50%, as it did last year, and quite often dips down to 49 or 48%, but 44% is pretty low. But at the same time, the actual headcount growth, if you take all the vendors that are growing, minus those that have shrunk, overall headcount growth is up or is 7.2% so far this year, which is better than last year's 6.7% for the same period and same vendors. So what to draw from that? I believe we're still in the great washout period post Silicon Valley Bank's failure. That was when a lot of investors, told their portcos to stop spending money, and of course, on the same count, the investors stopped investing money. They're very, very frightened, and I don't blame them. Many people probably had the most stressful weekend of their lives as all of their money was tied up in Silicon Valley Bank, and they could not access it to make payroll on Monday morning. Good argument for making payroll on Friday. They would have had 5 more days, or would have just made payroll because the bank shut down Friday afternoon. At any rate, that really slowed down investment in technology in general, but also cybersecurity. Those companies that slowed down, those especially that were planning on getting their B round or C round or beyond in that time frame and weren't able to, are the ones that are cutting back, right? They have to line up their headcount with their actual revenues. From my perspective, it's good because we track headcount very, very closely for all 4,000 vendors. And it makes, at least right now, headcount is a much better mirror of revenue growth and overall health than it is in times of exuberant investment. So there was a little shift in the ranking of the top performing sectors from last year. So that part is fairly steady, with, of course, AI security being the difference because we only started tracking AI security as a separate category last year. Last year, it was the fastest growing category in terms of headcount. It grew 42%. This year, it grew 26%, still the fastest growing sector. It reminds me of API security, which also the first year that we tracked it grew 42% and then settled off dramatically, so it doesn't make the top 7 anymore. But if you think about it, if it's growing 42% last year, it's bigger. So a percentage growth of 26% might actually be more people were hired into these companies because there's many, many more AI security vendors than there were last year. Data security is the biggest contributor to overall industry growth, which I find very interesting. and IAM close behind. Now, identity is the biggest, is a very large bucket, as is data security, right? So this is where backup and recovery companies go, or disaster recovery companies, plus all the encryption companies are in data security, and the fast-growing data security posture management, like Sierra, is in this segment as well. Training and IoT are some of our smallest categories, and they had relative growth. So that was a very healthy thing for both those. Categories like deception continued to languish. There are vendors in the deception space that are growing in a very healthy manner. So to me, that spells out that there's hope for deception, which is, I don't know, it's one of my favorite categories because it's such cool technology. So this might be a review for some people, but let's go through the global market. And this is the manner in which we frame the industry. And it's if you look at it, it's very, very close to a layered security model. It actually lines up with NIST very well, for that matter. Of course, NIST puts GRC at the end. GRC is actually the biggest component of the security industry today, and that there are so many vendors that actually do that. There are 584 cybersecurity vendors that are classified as GRC, but once again, this covers a lot of area, right? And they tend to be smaller than network security, for instance, and the actual companies are, and they have less technology to apply if you think about it, right? They're all about testing for controls, discovering mapping controls, etc. And that doesn't take any innovation in technology. It's just how are they presented, what breadth of coverage do they have for various regimes for compliance, etc. Data security comes in second, 527 vendors in that space, and identity just below that with 512, and network security 380. Network security used to be the biggest space. Certainly, it was the biggest when either it would be neck and neck with network and endpoint, right? Because you had firewall vendors versus antivirus vendors. That was kind of it, at least when I started tracking the makeup of the industry, those were the two primary sectors, right? There were all the antivirus vendors, and this is 20 years ago, and all the network vendors. And if anything is evident, it is that the combined innovation coming from the new endpoint detection and response solutions like CrowdStrike, SentinelOne, Cybereason, actually give a little credit to Carbon Black for being before all those, or Cylance that was acquired by BlackBerry. So that innovation in endpoint security to displace the need for or the functionality of the signature-based antivirus vendors at the same time as Microsoft doubled down on the market for Windows Defender and gave away a free solution. So basically, not surprising that is a natural outcome of a drive to the bottom in consumer, in commoditization of a capability, and that's exactly what Microsoft did. And then completely muddled the ability of anybody to measure the actual market by bundling it with everything else that Microsoft sells. And then depending on who they're talking to, they can give you a different number of their revenue that's associated with a different segment. And so they claim billions and billions of revenue associated with security. And yet, they tend to just include that in the contracts that everybody already has with them. So yes, endpoint security has dropped dramatically in number of vendors, thanks in large part to the remains of Symantec, which was Norton LifeLock, that went on to acquire Avast and AVG, and pretty much any vendor that began with A, any antivirus vendor that began with A or AV, and consolidated them all into a new company called Gen Security, which is still publicly traded. Still, of all publicly traded cybersecurity companies, it has the most revenue per employee. I like to joke that that's because they're entire customer base are people that can't figure out how to cancel their subscription because they've got security already on whatever platform they're using. So yeah, the other there includes the fraud and security analytics and a couple of email security vendors, etc. We took a look at smaller vendors, those less than 50 people and less than 5 years old, and pretty much have the same makeup, right? Other than as AI security comes around, it is, you know, it's the number two in small vendors of that size. AI security with 172 vendors now. I know a short, I think, week ago or 2 weeks ago, I presented the state of AI security, and I only had 161 vendors then. Obviously, every time I post a list or talk about vendors, I learn about more, and I've since learned about 10 more that we've gotten from various sites. So 171 security or AI security vendors. I think this is a good time to point out how IT Harvest takes a different approach to the industry analyst business. So your Gartners, Forresters, Omdias, etc., kind of take a what do our customers care about approach to industry analysis, and most of their customers have enough money to pay for assistance in product selection, big bucks, right? $180,000 for a typical seat for one of these companies, and those companies tend to buy from the very largest vendors. They don't buy from the innovators. They are literally late adapters. So the business model for a Gartner or a Forrester is to have very limited coverage of the entire space. But when you do cover the space, you focus on the top 10 or 15 big companies in it. Forrester recently announced that they will not cover a company if it's got under 50 million in revenue. Well, that would eliminate, of the 4,000 cybersecurity vendors, that would probably eliminate, all but 800 of them. And of course, Gartner's gone even further. We did a little test. We looked at all the Magic Quadrants for the last 3 years in cybersecurity, and we're very generous, included the disaster recovery Magic Quadrants in that. And we came up with 134 vendors that had products in Magic Quadrants. So Gartner has, a little less than 3% of coverage of the space. Our approach is different. We think if you're making a product selection, you should know all of the vendors in the space before you start filtering them out. So instead of Gartner making the decision for you, that you shouldn't look at the UTM vendor, and I'm thinking of Red Piranha here, that might be in your backyard if you're based in Perth. And you would not know that unless you had a list of all the UTM vendors in front of you. And of course, you'd call Red Piranha up first, right? They've got a perfectly functioning gateway appliance that would work for anything but the data center, probably. And you would get the best service, and you'd be supporting your local economy if you were buying locally. So, so the only way to do that is know all the vendors. Like I wrote a little Substack you can look up, 10 cyber unicorns that aren't in Magic Quadrants. And, that included Wiz, right? The biggest acquisition in cybersecurity history, $32 billion by Google. And there wasn't even a Magic Quadrant for it, and it didn't appear in one, and Gartner didn't write up about it. Now, mind you, the analysts know all about Wiz, and they talk to Wiz and get briefed by Wiz, all that. So if you're a Gartner client, you can ask them about Wiz, but wouldn't it be nice to know how Wiz lines up compared to all of its competitors, of which there could be 120 in the same space. And Gartner does not keep track or publish that information. So you can see a vastly different approach that could only be possible if you applied AI in the form of large language models to do the data sorting in and making sense of it that we do. Because otherwise it's just, me and the team of 6 people here at IT Harvest. Well, let's look at distribution of companies by country. 53% are based in the United States. No surprise there. And usually, somewhere between 40 and 60% of US companies are based in the Bay Area. And so The Bay Area of California is still the capital of cybersecurity for the world, despite Israel's claim to that. Now, Israel can claim to have the highest density per capita of cybersecurity startups by a large, large margin because the population in California is, I don't know, it's what, 7 or 8 times that of Israel. So it gets there. But Israel's got, I think it's 283 cybersecurity startups. Of course, there are many startups that claim U.S. headquarters that are actually Israeli companies. But that's always a journalist in Israel is going to assume that because the founders are Israeli and all of the tech work is done in Israel, that it's an Israeli company. And yet the founders, of course, will do everything they can to put themselves forward as a US-based company because that's where the customers are. We've done a separate study on that. You can look it up on my Substack. Um, so in terms of raw numbers, the UK is right behind Israel. And if we dug deeper, probably UK would show more security companies than Israel. There are 273 in our database now in the UK. And Germany's and the UK are similar, and France for that matter, which is the next one below Canada, um, in that it's just different. The startup world is so different in Israel and the US than it is from anywhere else in the world. In in Israel, is a good example. A startup has to plan for world domination, right? They have to plan to move into Europe and the United States because Israel doesn't have, big enough economy to present enough buyers of their products. In UK and Germany, they've got very large economies, but startups tend to start when a group of prospects say we need something from a consultant or something, and that person goes, "Wow, I got a great idea. I'll make that product and then sell it to you." Then they start taking it further and further afield, but they tend to stay within driving distance of their headquarters. Don't move around a lot, and they keep growing and adding product capability to serve the same customers instead of focusing on the one product and taking it to the rest of the world. So two different worlds to look at there. On that smaller set, um, about 36% of small startups are definitely, how to say that, of the 78% that are small, 36% of them are small startups. And then the mid-range breaks out like this. So very few startups that would qualify as large companies. Let's talk about the Cyber 150, which I come back to a couple times a year. This is an award that we present and publish in the Cybersecurity Yearbook every year. So in this version, 2025, still available on Amazon, is the first one where we published the Cyber 150. And the point was to demonstrate to people who research the industry, in particular venture capitalists and private equity who are looking for, who are the up and comers, that you can do that with the data, right? You don't have to do it by word of mouth. And the network that everybody has of talking to each other, which is great, and a lot of valuable information in that network. But if you just look at the data, so we basically took all the companies between 50 and 500 employees, and then sorted them by growth for all of last year, and we got the 150 Cyber 150. Cyera just snuck in under the wire because they had under 500 people at the beginning of 2024. And now with 952 employees, they are well out of, or they've graduated from the Cyber 150 and, but graduated successfully, right? Or we should say they've matriculated maybe, but still growing at an incredible clip. Of course, mind you, they took in 600 million in funding. So they've got lots of money to spend on growing and hiring, but they look a lot like Wiz at this stage in their growth curve that we keep track of. But the fastest growing this year was Hexnode. Hexnode is one that you might not have heard of, right? They do unified endpoint management. So not only do they do MDM, they'll do iOS devices, they'll do Android devices of whatever sort, and give you one place to manage those, patch them, upgrade them, all the rest. So they've grown 157%. Chain Guard, uh, one of the coolest ideas for a company. And I'm not sure this was what they went to market doing, but one of the things they did was, hey, we should create pre-configured images of containers that people can buy in from AWS, Azure, etc. They've done that, and they're selling so much of that they've grown to 576 employees. So another graduate from the Cyber 150. Super, super cool to follow them. Mimic is one of the anti-ransomware companies, grew 71% this year. They've taken in 50 million in venture funding so far this year. And I think that was just this year. I think there was another 25 million a year ago. So doing extremely well. Sublime is a cloud email security provider, growing, 156%. It's pretty amazing. Strike is a continuous pen testing company, and they've started to talk about how they use AI, but they predate AI. And it's Strike.sh. Not to confuse with there are like five different security companies with Strike in their name. This is Strike.sh. Blockade is, as you may guess, a blockchain security solution. Probably the one area that I know nothing about, since I don't see a need for blockchain anywhere. Um, but if you do have it, you should secure it. So there you go. And Akita is end-to-end security for SaaS. So something that, a SaaS company like IT Harvest would look at, right? So they look at, and on top of that, Zenity is a no-code, low-code security solution. So as we know, because if you get a demo of the ITR's dashboard, you'll see this beautiful, intricate, and complete application for filtering and choosing products and companies, all built by our CTO, Maximilian, and all built, the front end is all built on no code. Back end, a whole bunch of wiring into large language models for the data collection. Large language models aren't in the process flow for the user. They're in the process flow for us to build this database of 11,340 products. So out of those 4,000, 1,000 match our definition of startup. It's funny how even after a company gets to 500 people and they're 7 years old, they think of themselves as a startup because they're not profitable and they're still venture funded. They have to act like a startup. We don't use those measures, right? It's age, um, pretty much age and size that makes you fit our definition. So half of them grew, and 26% shrunk by more than 5%. So it reflects what I see when I talk to these startups that quite a few are hurting and looking for an opportunity to exit of some sort. And we see the strategics snapping them up right and left, right? Because they got great technology, great people that they've built, paying customers, but not the growth level that these other companies see. If you look at just companies founded after 2020, 2023 and after, those are going to be the AI era, right? Because ChatGPT was introduced in November 30th, 2022. And there were a few companies that saw it coming, right? Protect AI was one of them. It recognized that it was something to get into, and it helped them sell for somewhere between 650 and 700 million to Palo Alto Networks. But for the most part, companies that are founded after that date have to take AI into consideration, right? The investors are going to say, how are you going to counter the impact of AI on this sector, right? So you either have to use AI and have the right answer, or have a defensible answer. A good answer is, well, we're a consulting firm. But no, consulting firms could really use AI. Consulting firms could really use, the AI-enabled platform that IT Harvest has, right? If they're helping customers evaluate their stack and line it up with, map the entire security stack of a company to a framework, which, some consultants charge hundreds of thousands of dollars for that, and it could take weeks and weeks, if not months, to do. You can do it in minutes with our platform because we've already mapped all the products to NIST, CIS, and MITRE. Let's look at the AI security space because it's evolving and it's easily the most rapidly evolving sector or segment of the security space ever. Um, since we tracked it, we got to that 171 vendors. This is how they break down. If you look at the total employees of each of the AI security companies in each of these categories, the AI SOC space is growing the fastest, right? So far this year, 27% growth in headcount. And I think that reflects the fact that these are the ones that are telling me that they already have customers, right? So, and quite a few of them have hit a million ARR already, even though they launched their product in January. So that's pretty amazing. And that gives them the confidence to hire and knowledge that they'll have the investment dollars plus the revenue dollars to pay for those new hires. The guardrails and governance groups or subsegments may be converging. So far, I've talked to two that have totally changed their go-to-market. They started out as governance because there was a driver from the EU, with the AI law, and demonstrating that you had to be able to discover all of your use of AI in your organization. One of those showed me a platform that tracked 2 million different AI artifacts that they look for inside an organization, right? So if you take every single large language model that's on Hugging Face, every single NPC node and API node for this kind of thing, track it across all that, you'll get 2 million different artifacts. It's not 2 million AI companies or solutions, but a lot to track. Guardrails was the sector that started up because more of the fear, and you could demonstrate the need for it too, but the fear that, hey, we're going to empower our employees to ask all these questions. We should not give them answers to certain types of questions. They, could be for personal reasons. They may want to know about salaries, so you shouldn't, embed your salary information. And if you accidentally did, they should not be able to get it. And for that matter, they should not, the DLP side of that is that they should not be able to upload company data to the public LLMs. Even though it's interesting because the Anthropic, OpenAI, et cetera, first of all, they got a checkbox that says, uncheck this box if you don't want us to look at the things you've uploaded. So you probably got a contract that says they won't do that. But, you can't trust them. And things like HIPAA says it doesn't matter what they say. If you uploaded a patient record to a third party, you've just created a HIPAA violation potentially. So that's the world of GRC. Doesn't matter what the actual protections are. It matters that you lost control of the data. So I'm starting to see governance, guardrails, DLP coalescing into broader platforms that do it all. And they might even include the model security stuff that's there, which is 7% of the market. Keeping an eye on time here. I want to get to the big reveal, which is how much has been invested in cybersecurity across the board so far this year. This is a number that I track constantly, every quarter, every year, and then I publish it, the final number for the year, and that's how we keep track of, 2022 was the biggest year of 24 billion, 23 after that was 18 billion, and then a dramatic drop off to $10 billion in, maybe that was 2023. I'd have to get out my copy of Security Yearbook for that year. And last year was $16.1 billion. Well, if total at the end of the year. Um, $12.9 billion for the first 3 quarters, if we continue at the same rate, is going to lead to $17 billion. So almost $1 billion more invested this year than last year, which is a great sign, right? It means all these companies that got their initial investments this year will be growing through next year, hiring through next year, solving problems. Of course, I'm a advocate for this industry, so I truly believe that we need more vendors because there are more problems every single day. That deal count of 321 is actually lower than last year, and yet the total investment is higher than last year. So it tells me bigger deals. That's kind of been the trend, throughout the history of technology, right? Deal sizes get bigger and bigger and bigger for US and Israeli companies, not necessarily for European, Asian, or South American companies. Let's see. Oh, the average acquired company size is 140 people. Um, Yeah. And then the of the acquired companies, the average year-to-date growth for them is 34%. So most of companies acquired are growing. So that's the other sign. If you want to get acquired for a good price, you better be growing. Yeah, I'm going to take questions, so you can put them in the Q&A. I'll look there. And just to remind you, IT Harvest, the only data-driven industry analyst firm and the only AI native industry analyst firm that covers the entire long tail of the cybersecurity industry.